Welcome back. You know, if you've been holding Palantir stock, what an absolute roller coaster it's been. Seriously, if you're seeing green right now, hats off to you, you're looking like a genius. But with these kinds of wild swings, everybody's asking the same thing. Should I cash out? Should I buy more? Or should I just buckle up and hold on for dear life?
It really is the ultimate tug of war, isn't it? On one side, you've got a company with technology that could genuinely change the world. And on the other, you've got a stock price that's already flying high in the stratosphere.
Right, so which one is it? Are we looking at the ground floor of the next huge AI company? Or is this just a classic bubble about to burst?
That's the million-dollar question, and it's on every investor's mind. The believers, they see Palantir as the essential software for the entire AI revolution. For them, today's price is going to look like a bargain down the road. But then you have the skeptics, who look at that same stock chart and see a huge, dangerous bubble.
It really boils down to a story of incredible technology versus an equally incredible price tag.
Okay, I really want to dig into both sides of that coin. Let's start with the positive stuff. What in the world is fueling this amazing run?
Well, the bulls, they're really focused on three main things. First, just the mind-blowing growth they're seeing from business customers. Second, their super stable, rock-solid government business. And third, some really clever partnerships that are just opening up whole new markets for them.
Well, okay, that 93% is a huge number. What exactly are we looking at here? So that is the year-over-year growth in their U.S. commercial revenue. And the engine behind that is their artificial intelligence platform, or AIP. Put simply, every company out there is scrambling to use AI, right? Well, Palantir's platform lets them plug powerful AI tools directly into their own data. And this isn't just talk, it's turning into massive, massive sales.
And that's a pretty big shift for them, isn't it? I always thought of Palantir as mostly a government company. You're absolutely right, and that's actually the second pillar of the bull case. While the commercial growth is grabbing all the headlines, their government contracts are the bedrock of the company. We're talking about huge, long-term deals with agencies like the VA and ICE, not to mention major international deals like a defense software contract with the UK. It gives them this really stable, predictable income that investors just love.
So, you've got the steady government money, plus this explosive new growth from businesses. Is there anything else pushing the stock up? Oh, absolutely. There's a new partnership that could be a total game changer. They've teamed up with Snowflake, which is a giant in the data cloud world. By basically plugging Palantir's AI into Snowflake's system, they're making it super easy for a whole new group of customers to start using Palantir's tech. It's a brilliant move that could really kick their growth into an even higher gear.
So with all this great news, what's the feeling on Wall Street? Are they buying into the hype? They certainly are. In fact, an analyst at Piper Sandler came up with this really catchy phrase, "Don't say bye-bye, say bye-bye." And it just perfectly sums up the conviction that a lot of analysts have. They don't see this AI boom as a temporary thing. They see it as the beginning of a huge, long-term growth story for Palantir.
You know, talk is cheap. Are they putting their money where their mouth is with actual price targets? They are, and some of them are pretty ambitious. You got firms like Bank of America and Piper Sandler setting targets in the high 20s, even low 30s. They see a lot more room for this stock to run, even after its huge rally. Their bet is that this AI-fueled commercial growth is not only going to continue, but actually speed up.
Okay, I have to admit, the bull case is really, really strong. You've got explosive growth, big government contracts, and all the love from Wall Street. It almost sounds a little too good to be true.
And you know what? That's the perfect question, because the catch here isn't about the technology. The bears, the skeptics, they don't really argue that Palantir's software is bad. What they argue is that the price you have to pay for the stock is just way too high. It all comes down to one single word: valuation.
Okay, can you break that down for me? What does valuation really mean in simple terms? For sure. Think of it like this. You can buy a solid, reliable car for a certain price based on what it does right now. But a concept car that promises to fly someday, that's going to have a much, much higher price tag. You're not paying for what it is, you're paying for what you hope it will become. The bear argument is that Palantir's stock price already assumes decades of perfect performance and flawless growth.
So, how do you see that in the actual numbers? This slide really says it all. We're looking at the price-to-earnings ratio, or PE. It's just a common way to see if a stock is expensive. Palantir's is sitting around 58, while the average for a similar software company is more like 42. Now that gap has gotten smaller, but it still means you're paying a huge premium for Palantir. The company basically has to deliver spectacular growth for years just to live up to the price it has today.
If the price is really that high, it makes me wonder, what are the big smart money investors doing right now?
And that's maybe one of the biggest red flags for the bears. We're seeing some of the most famous investors in the world either trimming their positions or selling out completely. Ken Griffin's Citadel sold a massive chunk of their shares. Cathie Wood's ARK Invest has been selling pretty consistently. Even Stanley Druckenmiller, an absolute legend, sold all of his shares. You know, when the pros start heading for the exit, it suggests they think the risk is getting too high.
Wow, that is a serious red flag. Are any analysts putting out specific warnings on the other side?
Yes, they are, and some of them are pretty blunt. There was a really stark warning from the firm Jefferies, who at one point said they saw the potential for a 66% crash. The thinking is, if Palantir's growth slows down just a little bit, or if the market's excitement for AI stocks in general just cools off, this stock has a very long way to fall. It's priced for perfection, so any little stumble could cause a huge drop.
So, is there any actual proof that growth might be slowing, or is that just a what-if scenario?
Well, we are seeing a few early signs, some little cracks in the narrative. For all the talk about the booming U.S. business, their international revenue actually went down by 3% recently. And overall, while growth is still good, it's expected to slow down from its peak. For a stock with such a sky-high valuation, that's a pretty dangerous mix.
Okay, so we're left with two completely different narratives here. One is a revolutionary AI company that's firing on all cylinders. The other is a dangerously expensive stock that some of the smartest investors are running away from. How do we make sense of this?
Let's just lay it all out side by side. The reasons to be bullish, the bull case, it's all about the future. It's about explosive AI growth, new customers, all built on that stable government foundation. But the reasons for caution? That's all about the present. It's about an extremely high price tag today, major investors selling now, and signs that growth might be slowing down.
So here's the bottom line. It all comes down to a race. On one side, you have the company's actual performance, its sales, its profits. On the other, you have its sky-high stock price. The bulls are betting that the company's performance will eventually catch up to and even pass its price. The bears think the price has just gotten way too far ahead and it's bound to come crashing back down to reality.
So what we have is a company with absolutely incredible potential, but a stock price that already reflects that, and maybe a whole lot more. The big question is really which part of that story you believe in the most.
Exactly. The decision really comes down to how much you believe in their AI platform and how much risk you're willing to take on with that high valuation.
You've heard the bull case, you've heard the bear case. Now the next move is yours. Thanks for joining us, and be sure to subscribe to the RichTogether TV channel for more explainers like this.